Hello everyone. Well, it's day one of the new Brisbane lockdown, which appears to have expanded across the entire state of Queensland, and I'm sitting here in Mackay, kilometres from Brisbane. I think I might have misunderstood the guidance that we should wear masks, so as long as none of you mind, and you're not going to report me for not wearing one, I'm going to take my mask off for the lecture. That's better. I think I'd look more attractive with it on, to be honest. So this is the last lecture for the unit. I decided to combine week 12 into week 11. There's a little bit I might add on, but I might just put that out as a mini lecture for one of the tutorials towards the end. So today we're just going to have a look at very, very high level. I am not an accountant. And I would say if you are thinking of starting up a business as a sole trader yourself, or you have the opportunity to join a partnership, then you really should take financial advice from a qualified accountant, and with the possibility of also taking some advice from a legal practitioner just to help you out. Generally, they do a good deal for new business startups because they're hoping to get more money out of you as you grow and get bigger. So don't skimp on the setting up. Okay, so I'm just giving you a few pointers. Do not rely on what I'm telling you. It's interesting, up at the top here, I found a little quote. A great many small businesses fail, not because you, the owner, does a poor job or provides an inferior service to their clients, but because their firm that they've set up, which may only be them as a sole trader, their firm is not run like a business, maybe like a hobby or a little side line going on. Most small business people only know, it says 1/2 of what it takes to succeed. I would actually argue they don't even know that much. There's so much out there that you need to know and to be on top of over and above your main professional skills, which is the services you're selling. So bear that one in mind for us. Okay, so let's dive straight on in, shall we, and have our snapshot view on what we need to do. So I think we should start with the legal stuff, which is fairly obvious. Everything you need to know is online. A lot of it's online. So let's have a look at the top here. So if we have a look just at the top here, look up here, there's a lovely little website that I would like you to go to and have a look. It tells you everything you need to know. I'll just click it for you so you can see. It takes you to the Australian Securities and Investments Commission, and there's a lot of information down here that you can go for. So it tells you about if you're eligible, what sort of structure that we talked about the other week, how to register a name. So if you're thinking of doing it, or you're trying to answer the assignment question, use this website. It's really quite useful for you. So that's that lot there. And also you need to go and have a look at the Competition and Consumer Commission, and you need to look at the Taxation Office as well. I just picked out 3 things that I thought were of use for you. One is the business name. Okay, if you're going to start up a business and you want to call it a certain business name, like Apartments Are Us Building Certifiers, or Run Quick We Didn't Certify, then that's a business name, and you have to register that in Australia. So you can then use that name in all states in the Federation. Sounds like Star Trek, doesn't it? Let me just move my camera that little bit. You don't need to register yourself as a business name if you're just going to use your personal name, and you find a lot of small businesses do that. You know, you might, dog groomer, hairdresser, mobile ones, that sort of thing. It's nice and easy for them, and for tax purposes, and that's very easy, which we mentioned in a minute. but it does have drawbacks if you're trying to get larger clients, more repeat business, because they begin to expect you to actually have a more of a business image, not just yourself. If you've got a company and you want to conduct your business under a company name, that's when you have to register that name, and they have to check no one else has got the name already. So be prepared, you might have to change your name a few times. Alright, same thing with the partnership. You have to register the partnership name. It could be Smith & Jones Certifiers or Building Designers or whatever, but you have to do that. That's the first step that you need to do. Secondly, there's the taxation side of it. Okay, so from the taxation point of view, I've said this in other things all the way through here, but they're saying it. This comes straight from the ATO's website, basically. You need to set up a really good record keeping system so you can track your income, your expenses from day one. That basically means you start the record keeping up before you start the actual business up, because you will be incurring expenses in preparation to start the business. You'll be buying some equipment, you'll be paying some insurances and that before you do any work. So you need to be able to track it. And some of the best things are software based. There are some bookkeeping softwares. I won't mention any of them because I don't want to be accused of showing. What was that? Oh, it's a dog. Sorry, I didn't know he was in the room. Also, by recording everything, and these systems do it for you, it allows you to analyse how you're performing. Alright, and also tots up your tax for you. It'll all do your GST, and if you employ people, your PAYE, pay as you earn taxation that you have to withhold from them and pay to the government on their behalf. Also, there's superannuation payments as well, so it can get quite onerous at times. Once you get more than maybe 3 or 4 members of staff with you, it then, from my experience, begins to get increasingly beneficial to employ a person just to run the office and do all of this stuff. Okay? The people you're employing, you really want to be earning the money. And you don't want them to be spending and wasting their time doing this stuff. Or you don't want to be. An electronic payment system would be extremely advantageous. So your clients can just do electronic banking to pay your invoices, and you pay all your invoices that way. It keeps a record. Electronic payment systems dovetail into the software that we were just talking about as well, so it's all recorded for you. One thing I used to do, I used to have a dedicated credit card purely for my practice. Anything at all that I purchased for it, whether it was an ink refill for a pen or an all singing all dancing new computer, it was always bought on that credit card. Paid off at the end of every month, of course. But I did have an itemised record automatically. All businesses need a tax file number. You've got a tax file number as an individual. Okay, so if you're a sole trader, you don't need a separate one. You just use your own personal tax file number. So as it says there, I've jumped ahead of myself. If you're a sole trader, you just use your personal one. However, if you're in a partnership, a trust, a company, any other sort of organisation that you can pick for running your business, it needs its own tax file number. It's treated as an individual by the ATO, by the tax office. If you are an employer, you've employed a couple of people, then you get dragged in. You have to meet their end of tax liabilities. You don't mean you pay them their fringe benefits and that, but you've got your pay as you go, your PAYG. You withhold their tax from their salary when you pay them, and then you have to pay that withholding to the tax office. And you can see how that could get a bit out of hand if you're not really careful. So again, electronic records and an advisor would be very helpful, this sort of stuff. So you withhold amounts, but that's your employees. It's for anyone else, subcontractors. You might employ someone with a specialism for one particular contract or whatever. And if you've got a business and that doesn't have an Australian business number, then you have to withhold the tax from their invoice. Tricky. So this is a reason why, if you're a sole trader, you may want to make sure you have to have your ABN and you register for General Services Tax, GST, because then no one's going to deduct anything from your invoices. It's down to you to do it. Detailed record keeping requirements. Well, there's a little website here, a little link, and it takes you to the Australian Tax Office. Detailed business record keeping requirements. It gives you 5 rules for it. If I click it for you while we're looking at it, just to make it clear. 5 rules. 1, you need to keep all records relating to starting. I mentioned the starting bit. Running, changing, blah, blah, blah. You've got to keep records of relevant information. Your records must not be changed. Once they're there, they're there. You've got to keep them for at least 5 years. Sometimes it can be a bit more. Here's some examples of other things why you need the 5 years. You need to be able to show the Australian Tax Office your records if they ask for them, if they decide to do a snap audit on you, which they do quite regularly. And your records have to be in English or easily converted to English. Okay, so I just thought I'd show you that one there. You can register your business for Australian business number or for general sales tax or pay as you go and a business name all at the same time in one fell swoop on the internet. If you go to the Australian Business Register, type it in, it'll take you straight there. And the last little thing is really just something to help you out, because a lot of what you need to know you have to look at those websites for. But the tax office, the ATO, have got an app. Who in the world hasn't got an app? Well, I haven't got one, but they have an app and it's brilliant. My son put me onto it and I've used it now. Wish I'd known about it when I was working for myself. Maybe it wasn't out then. And it's fantastic. You just have it on your phone, and when you buy something, you take a photograph of the receipt, the invoice, and it's automatically uploaded. So small businesses, individual taxpayers, even if you're not working for yourself and you just want to you can use this app just for your own personal tax. Snap, 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 and it's all collected for you. You can download it from Google Play or the App Store, depending which one of the lovely devices you're addicted to. I had to put in what they said, only get it from an official app store, make sure, because you don't want to get spammed or anything. There's a little bit more about it. I only picked a few of them here. So there's one part of the app called My Deductions, which makes it easy for you to record your expenses and your incomes. It even does, that should have been the fuel tax credit calculator, so you can run your car on this one. You can check your business performance through the app against similar businesses of similar size to see how you're doing, and there's a load of other things it can do. That's on this link at the bottom here in yellow, just here. If I click it, we fire off. It's the ATO again, but it takes you about their app, and it does so many different things. It's, you know, I don't like apps normally, but this one I can see there's a use for, because the tax office knows everything about you anyway. So you can't really tell them any more than they know. So try not to fall foul of anything if you start working for yourself, or if you join a partnership, you want to see all the accounts, and you will definitely have an accountant and a lawyer or solicitor look at everything before you decide to join an existing partnership or set one up even. Break even. You're setting yourself up, okay? So you've got to know how much money you're going to need to make. And that ties into how much of your services are you going to sell for how much. I mean, you could sell your services really, really cheap, but you'll have to sell loads of them. You'll have to do loads of designs. Or you can just do a few at a higher rate, which is less stressful for you. Okay? So you normally work out, you can do it by a week, month or year. I'm used to monthly arrangements with a yearly total. You may do it fortnightly. A lot of us get paid fortnightly and think that way. But if we look at the top up here, we've got things that you need to know. So your liabilities and costs. If you're setting a business up, you're going to have certain costs. Liabilities are things you've bought, you know, and that's for the business. But because you are the business, if you're the sole trader or just one of two partners, you also need to know what your personal liabilities are. Wages. How much are you paying other people? If it's only you, how much do you need to be paid to cover your personal living costs? And this is where you would work out what salary you need. You then work things out like, well, what's my rent or mortgage? How much is my car payment? What's my telephone cost? What's my internet cost? What's my council rates, my water rates? Oh, yeah. What about holiday time? Because you don't get holiday pay when you work for yourself. So, you know, I've got to build in a couple of weeks so I can have a holiday. Car, did I mention the car? Buying it, running it, servicing it, tyres. What about food? To run the house with. Clothing. School fees. Do I need to go on? Have you got the idea about this? You go through everything it costs you to live, you work it out, you add a contingency to the total, so you come out with a total, and I would recommend you add 20% to it for the unknowns. You add 20%, that's your basic take home after tax income you need. No point working it out before tax, because when they take the tax off it won't cover your costs. So you do that, and then you have to add the tax on to come up with the figure you need to earn. Good. I hope you do this well. There are a lot of the banks, if you go to their business pages, they actually have templates you can fill in for this. Most people do it on an Excel spreadsheet maybe. Taxes, you need to know what taxes you're going to be liable for. Obviously your personal tax, but it depends how you set your business up. Your GST is currently 10%, probably going to go up in the future. Government said when they brought it in it would never go up. As soon as the government says something like that, you know it's going to happen eventually. So, think of the Gateway Bridge in Brisbane. They built that, put a toll on it, and told everybody that after 20 years the toll would have paid for the bridge and it would be taken away. They never took it away. They duplicated the bridge and put an even bigger toll on. The tolls will never go. Never expect them to go. So general sales tax, I think it's worthwhile registering. It does bring a load of paperwork and a headache to you, but if you use one of these software systems, these bookkeeping systems, then as long as you put everything in properly, it will tell you the end of each quarter, and it will even print out the form for you to send back to the ATO. GST is very useful at the beginning when you set up, because you're paying GST on everything you spend and buy to set your business up, and you can claim it all back once you earn a bit of money, so it's well worth it. Superannuation, you become responsible for that, for yourself, and also for your employees if you start taking them on. As I said, allow for holiday pay, employees as well if you've got them, and sick pay. People can be sick, so there are legal requirements for how much and how long you have to pay people. Work cover in Queensland, I haven't looked up what it's called in other states, but it's there. It's insurance on your employees in case they're injured while doing their work. That costs you so much per week per employee. Rent, if you're renting accommodation for your business, you may have a nice house, and like I have, this isn't it by the way, this is the unit in Mackay we rent, where I've got an entire double bedroom set up as an office, and my accountant claims a percentage of all the costs of the house for working from home. Not at the moment because I'm not working from home, but I will be claiming costs for working in Mackay out of my electricity bill, etc. Insurances, you've got your professional indemnity, you've got your public indemnity, then you've got might have your property insurance, you may have insurance on your staff. You can get insurance against staff behaving dodgy. You can insure equipment and everything. You can just spend a fortune on insurances. Car insurance. Then there's your professional costs. If you're a professional, you'll pay professional fees. There may be a few other things. If you've got a license of some sort, you may have to keep renewing the license on top of your professional fees. Then you've got depreciation, things you've bought. You bought a car, you bought a laptop. They depreciate. They lose about 20% of their value each year that you can claim back on your tax. We had just come out of a period where you had, I think, up to $50,000 you could claim instantly. You could have all the depreciation if you went out and bought a ute. That's part of the stimulus package, but that finished a few weeks ago. So once you've worked out all of that, if there's anything left after that, then that's profit. So if you've made more than that, you're beginning to make profit. You need that break. So knowing your break-even point will establish the level of fees you're going to pay. I mean, fees aren't random, they're worked out very precisely. They are one factor. Another one is the efficiency, how efficient you are undertaking your services. Net income, as it says there, the amount that is left after all the others and the deductions. So your net profit margin is the ratio of your net income to the total revenue as a percentage. There's an example there. Okay, so you've got your profit after everything's paid is 14 and a bit grand. You actually had invoices, you charged people 193 grand. So work that out, and that's a 7.6% net profit margin, which is pretty good actually. That's pretty good. Debt to equity. It's your total liabilities divided by how much of it you own. Or you don't have loans on it, or other people haven't lent you money to it. Okay, so it just indicates how many dollars of debt there is compared to the equity that you have in the business. Beginning a business is always better if you can do it with the lowest possible debt to equity ratio. So you use mostly your own money and not loans from Auntie Rita or a bank loan. The more you can finance up front yourself, the better. Makes you a very low risk. You tend to find, I say low risk, don't confuse that with with a lending institution seeing you as a low risk. They have different parameters, but this does help. Conversely, if you're starting a business up and you've got a high debt to equity ratio, you've had to borrow money to get started, and that can be the case in certain businesses where there's big expensive equipment that is essential. Not many people have that cash sitting around to buy it themselves. They may lease purchase it or something. That could be seen as a high risk business because it's got a high gearing of loans and that if it goes wrong. So the chances of debtors getting their money back is a bit less positive. Return on the assets. So the return on the assets, these are all KPIs by the way, is the net profit margin multiplied by the asset turnover. I'm not an accountant, that's an accountancy term. So return on assets, it's a factor of the profit made after you've covered all the fixed and variable costs of the assets. Okay, that's a function of the total sales divided by the total assets. So basically, but if you have $300,000 in sales and $100,000 in assets, your asset turnover is 3. Remember, those assets could be the car, the office, whatever. If you've got a 15% profit margin, we'll assume that, and that's being really, that's a really, if it gets that, that's good. That's really good. The return on assets is 15%, so 0.15 is your net profit margin, times 3 gives you 0.45, which is a very good return on assets. Generally, if we're talking about professional building practices, designers, certifiers, etc., we're not asset intensive, we don't have to have specialist equipment, we just have normal office equipment generally. But we say this, don't dismiss this. This is a good KPI to measure. Okay. If you're thinking of taking out a bit of office space and not working from home, and you happen to be in one of the capital cities, this could be a lot of money. This asset, that office space, would be a lot of money tied up, which would have a direct effect on your return on asset ratio. How about return on equity? Accountants like return, don't they? They say, and I agree, it's the most important for a small practice to know. Okay? You've got your own cash invested, so you really want to know this. It shows the capacity of your business to generate cash. It's a measure of the business to sustain itself without having more investment or injections of cash needed. Return on equity is net profit over owner's equity. So net profit is what is left after deducting all the costs and the sales, etc., as we said on the previous screen. So owner's equity equals all the total assets minus the liabilities. The example being, you return here, you've got $25,000 in net profit, you've got $100,000 of your own equity invested in the company, so your return on your equity is 25%, and that's really good again. That's really good. You'll find some of the big consultancy firms do not get to these figures. Balancing the debt, etc. If your return on equity is low, or your return on your assets is also low, which is not unusual, just, you've got to focus on strategies to increase that profit margin, that gross profit margin. So you're going to become more efficient, or you're raising your prices a little bit, or you're reducing your costs. You need some clear projections on where you want your business to go over 3, 6, 12 months, and then you might go to 5 years eventually. So, and they're performance indicators on how all these things we just talked about are, and you measure them, and your software will measure these automatically for you if you fill them in, and it'll give you graphs and everything, which your accountant will have. He will get so excited when he sees you've done this for him. Generally in business, the most important thing, and I can put my hand on my heart and say this is absolutely true, the most important thing you can possibly have is repeat business. You want clients you work for to come back to you by choice again and again. I was lucky enough to actually have that. When I worked for GHD, and the GFC meant all us middle managers left. It was only within 6 to 8 weeks after leaving that 3 of their reasonable sized clients had tracked me down and asked me if I was setting up myself, and on the basis of that I did, and I did really well for a good few years. So, and they kept giving me work and work and work. So I treated them as partners, not clients. So you need to increase your sales, get more cash flow. There's nothing smart about it. There's no instant remedy to this. It's a gradual increase. Okay, so when you get a client and you like the work they give you, and you actually, most importantly, you like the actual client, then you can cultivate that really well. Can get iffy when that contact point changes jobs, as it did to me at one point, but luckily my client went to a job where he could use me even more often. Ask yourself if there's anything else your business can offer. You've started out doing your professional service, but is there anything else you can do? Can you branch out a little bit? Do some low-cost stuff that's of a high value to the client, maybe, so they don't have to shop round to get loads of people. They can have a one-stop shop almost in some instances. Okay? Look at the importance of the repeat sales, I told you. Referrals are very, very good. It's nice to get a satisfied customer to be able to give you a nice testimonial and to be able to be a reference if you're going for a tender or something. So, and loyalty works both ways. Don't get complacent just because you're going really well, because things can change instantly. People move jobs, etc. So that's balancing your debt and your equity. So we've looked at the legal stuff, we've looked at the break-even. Have a look at assets. Assets. Oh, we can buy things. Well, be careful about assets. All right. You can either have two types of asset. There's the asset for producing your services. You need them. You need those. There's capital assets such as buildings. Yeah, okay. And then there's the assets that don't produce any income at all. Immediately ask, do you actually need them? Do you need to buy those assets? Is there any way you can not have them at all, or can you just pay for them as and when you need them? Does someone provide the service? I mean, that could be a bookkeeper, could be that. So assets that don't produce you any income are a nightmare. They do have a habit, like barnacles on a boat, of cropping up and you don't realise it. And they ruin your return on investment or return on assets. Okay? Don't think because you've got a nice shiny new company card with a nice high credit limit on it. Oh, don't go as high. My credit limit on my card got to $100,000. And then I realised when I went to remortgage that they assume that if you've got a credit card, whatever its credit limit is, they assume you owe that amount of money, even though I paid it off every month. What happened to that credit card? I chopped it up, got rid of it, and got a new one with a $20,000 limit on it. Because I didn't need it, it just kept cropping up. Keep an eye out for that. Okay? When you find you've got the opportunity to, it's possible, consider the income producing value of your assets. And get rid of the ones that don't produce any. I mean, don't forget, staff can be assets, unfortunately. But try to avoid acquiring them in the future, because we all make mistakes. I might remember once, one client wanted a fax, so I bought a fax machine. I used it about twice. I had it for about 8 years, and I still had the original roll of paper in it, because computers caught up and did it all, and email and electronic PDFs took over just as I started them. All your assets have got to be financially weighted against their cost, their performance. That's a KPI. You give a KPI to every asset. Normally with a building practice there are mandatory costs you cannot get away with. You do have to have a computer with some basic software, etc. You need to take training in using the software. You might have to have some extra staff. There's loads of things that you can't avoid, but just plan for them carefully. I've got some basic essential assets for a sole trader starting off here. Thought it might be useful. I just brainstormed this out. So when I talk modern business, I'm thinking consultancy. Okay, we're consultants. We use our heads and we sit at desks. We do go out on site sometimes, but our main work is done at a desk. So you need communications. You've got to communicate. You need a computer to do email, which means you need an internet connection. You're going to need a telephone. Now you can use voice over internet and Skype, etc. if you want to. That's becoming quite popular with businesses. Or you could have your mobile phone, or combine them all together. I still maintain you need a physical address. Okay, now that might just be a PO box or something, but you need somewhere for people like the tax office and the government to send snail mail to you. Don't forget to check it. You need some form of transport to move around. We normally go around with a little bit of equipment, most of what we do, so you need a car. You can find a van's a bit more tax effective, but you can't. If you have a van, you can say it's purely for work and you don't have to keep a logbook if you can convince your accountant. Computer, printer and a scanner all in one. The computer could be a desktop, mostly laptops nowadays because you can take them home, they don't get stolen as much. Then you need the software, so minimum I'd say Microsoft Office, something to do pictures with, maybe CAD. Then you've got the bookkeeping, accountancy software. Then you might have particular software, design software if you're a building designer, whatever. There's loads of softwares you might have to have. They all have a license fee and a purchase cost or a monthly renewal fee. Don't forget you're going to want some furniture. So you've got to buy a desk, a chair, a filing cabinet and a waste paper bin. And I tell you now, your waste paper bin's never big enough, especially when you start out. Yeah, basically you can buy them second hand, they don't have to be new. Business stationery, where you want some business cards. You might want some folders to put your reports in, or some cover sheets to make them look nice and professional. They're always better if they're printed professionally than just print them out of your own printer. People can tell. Oh yeah, don't use an inkjet printer because it gets wet, it runs. Always use laser printers professionally now. You might need your personal protective equipment if you're going out and about. Hard hat, steel toe cap boots, high-vis jacket, eye protection, gloves, basic stuff you might need, depends where you're going to. Office supplies, paper, pens, all that sort of stuff. You might have certain equipment you need when you're going out on site. You might need laser measures or damp meters or whatever you're doing. I can keep thinking, I'm sure you can think of many more, and there'll be a slightly different list for everybody. But stick to it, don't go mad with them. That's your assets. I didn't want to do that one. Why does that one come up first? I actually wanted the business plan to come up first. So you're starting your business, you're thinking of it. Well, it begins to become alive on paper because you do a business plan. You need to evaluate everything about the idea of starting the business. You never assume anything. You don't get overly excited about it or emotional. You try to put figures against absolutely everything you need, all those assets, everything. You need to work out the costs of all of those, double check them, get quotations and base it on a quotation. It's basically doing a due diligence of all the costs. You need to invest to start your business. Might be probably best with a small sole trader to be your own cash. Keep that investment to equity thing right. You might borrow money from a relative, and that becomes equity. There, the relative's equity. Or you might have to borrow from a bank or something, and that becomes a debt or a liability. While we don't like losing money, I lost nearly $9 last week when I bought a lottery ticket, and I walked in today to buy another lottery ticket, and the shop I bought it in sold the winning ticket for the $50 million Powerball. And I thought, they gave my ticket to someone else. Didn't like losing that money. So when you look at it, you've got to keep tabs on your costs. You've got to keep tabs on where your cash is going. You've got to make sure things are paid on time to avoid, late payment clauses and that. Keep an eye on interest rates as well. All right, they're normally quite hidden. Look for those hidden fees that get charged. Read the small print on anything you do. Okay. The old adage is quite true. Borrowed money costs money. Yep, you're paying someone else to have their money, and you'll be paying them quite well. That's money going the wrong way for you. And then we go, the last bit is a surprise. What? So to obtain commercial borrowing from a bank and that, most of the time, an asset, they want an asset to secure a security as collateral to cover the loan. You may only be borrowing $20,000, but in most cases, they want your family home put up as collateral. So if your business fails in it and they want that 20,000 back, they can force you to sell the family home. So avoid that if you can at all things. Right? This is where you've got to keep the emotion out of it. When you're planning, doing this business plan, basic section headings to think about. Well, obviously a title page, because you're gonna hand this round to accountants, lawyers, maybe the bank. So you need to start off with a summary, which is a short, just like an executive summary we do on all our assignments there, just to explain what the business is, explain what the plan's about, who it's for, and what the main positive and negative points are you found. Very short and sharp. Then you go into describing your business. Really clear, really detailed description. Get the fences around what you are and you aren't going to be doing for your business. Make sure that includes costs like insurances, professional requirements, etc. Then you get to the market. This is the big area. You would have done a lot of research into this to find out if there's even an opening for your business in the market. It's a critical review of the existing market, the competitors. What do they charge? What do they offer? Where are they? What's their reputation like? Do they specialise in certain areas? Do they just do public areas, or do they do residential? Or you need to know all of that. What's the growth potential? Have you found an opening where you could get growth in that? And most importantly, what differentiates you from them? Why are people going to come to you and not them? You've got to make that really clear. Then you're looking to the future. Your crystal balls are coming out now. This is where you're looking at your growth plan over 3, 6, 12 months, then on to 5 years. Are you looking at expanding? In 2 years, are you looking to open another office somewhere else? So you're getting better geographical coverage, or you're looking to an area that is beginning to develop, and you might want to get your foot in the door there nice and early. I know someone who did that at Springfield, Queensland, and they're doing really well there. They sat there twiddling their thumbs for about 18 months, and then construction development really started to get going down there, and they were in there first. Your finances, this is another one, this is all spreadsheets, etc. Where are they coming from? How much is yours? Who else is giving you money? If you've got loans, I think, what's the interest rate? If you're borrowing money from family, that's their equity, what's the plan to repay them? Are they getting paid a certain amount each year? Or are they looking, you've only got it for 4 years and you have to pay it back as a lump sum plus interest, or not with interest? And then you put in supporting documentation. You'll collect a lot of this. Just an appendix, so that could be documents from your bank, client testimonials from where you work at the moment, personal testimonials about you. It would be all your professional qualification certificates would be in there. You'd have your market research in there, loads of stuff go in there, and then a glossary just to make sure that you haven't used any dodgy little terms that the reader may not know. So you have everything down there, like ATO would be Australian Tax Office, because they read it, they know that, oh, that's us, but you give it to someone else and they may not know. So you spell it all out, and you can get a template to fill in from the Australian government here. Click my little link that you'll have to type in. It brings you here, how to develop your business plan. If you come down, okay, how to run it, there's the elements of it, and I'm sure down here tells you everything to do. There's a template. You can fill it in online, download it and use it. It's from the Australian government, so there's no problems with doing that. And that's really it. That would be... Oh no, we didn't look at why we fail, did we? Well, let's have a look at why businesses fail. Very simple. Number one, lack of experience. Now that sounds stupid to everybody instantly. I'm a qualified building designer. I'm a level 3 building certifier. Whatever you are. Yeah, you are. In your professional field, you are probably the best there is. But, as I've been trying to hint at through this presentation, running a business has got a hell of a lot more. Think of it an iceberg. The bit floating above is your services, but floating below is all the legal, the accountancy, the admin, is all down there, and you've got no experience of that. So that's one of the reasons why nearly 90% of new businesses fail within their first 5 years. Okay, so take advice. Insufficient capital, struggling from day one, obvious. Overestimating how much you're going to make, your sales. Market research probably wasn't too good. Over-investing in fixed assets, getting carried away buying stuff you don't need. Well, we did just talk about that. Some people tend to use the business funds as their personal funds, especially sole traders will do this, because it can go into their own bank account. Don't do it, that's all I can say. Strangely, you can get too much business. Maybe you're charging too little, and you're stressed, and you're rushing the work, and you start to make mistakes. And then your PI might go up if you get claims. You haven't planned properly, poor planning. That'll bite you in the foot. Poor financial control, you deserve to fail if you're not keeping on top of that. If you don't fail, the tax officer certainly make sure you sink. Poor customer service, they're your lifeblood. Even if you don't like them and they're being idiots, you've still got to be nice to them. Underestimating your competition, never underestimate your competition, because they'll be keeping their eyes out for anyone new in the market. So don't give up too quickly, because it doesn't happen overnight. And then there's the one I added, the unforeseen economic events, the global financial crisis. You're in the travel industry now with COVID. I mean, you cannot foresee these things. So that's the end. That's our entire unit finished now. All these, as you know, they're all on Moodle, they're all on that YouTube channel with the supporting YouTube videos if anybody's ever looked at them. I hope you've enjoyed it. I hope you got something out of it in various places. Just good luck. You come back, I'm willing to help you with anything you want to later on. So, been a pleasure. Ta-ta, everybody, and cheers.